Monochrome Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monochrome.
Hello and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Great to have you with us here at ausbiz. Let's check what happened overnight. Global equity markets mostly higher on an increased appetite for risk despite political uncertainty in Europe. On Wall Street, the S&P 500 closed at another record high. Chip stocks rallied, which sent the Philadelphia Semiconductor Index to an all-time high. Broadcom and US-listed shares of Taiwan Semiconductor led the gains along with Micron Technology. Apple and Microsoft rebounded from early losses, while Nvidia retreated from a record high, and Tesla shares bounced higher. Shares of GameStop tumbled after the chief executive told investors that the video game retailer plans to operate a smaller network of stores. Meanwhile, Goldman Sachs has raised its 2024 year-end target for the S&P 500 to 5,600 from 5,200, pointing to strong earnings growth by 5 mega-cap tech stocks and a higher fair value price to earnings ratio multiple. Microsoft, Nvidia, Alphabet, Amazon and Meta have collectively surged by 45% and now comprise a quarter of the S&P 500 equity capitalisation. Goldman cites tech strength and enthusiasm for AI as reasons for the upgrade. Well, the Philadelphia Fed President Patrick Harker has forecast one interest rate cut this year. If his economic forecast plays out, he said, in my view, this calls for a cautious approach. If we start to see several months of where we're seeing data move in the right direction, I could see taking action, but I'm not there right now. Meanwhile, the latest data shows the New York Fed's Empire Manufacturing Survey fell less than expected, and US Treasury yields rose after falling sharply last week ahead of further economic data and more Fed speak. The 10-year yield rising to 4.27 and the 2-year up 8 basis points to 4.76%. And the US dollar has slipped against the euro following last week's political turmoil in Europe. The Aussie is buying 66.2 US cents. All right, so let's get across those macro moves, what we're seeing equity-wise, particularly on Wall Street. Steve Sosnick is the chief strategist at Interactive Brokers. He joins us now. Steve, very good to catch up with you. So, I see from your note that you're pointing to momentum and FOMO driving the market at the moment. Does that concern you?
Good evening. Yeah, to some extent it does. I mean, it's one of these things, I called it MoMo and FOMO. And, you know, it's one of these things, we all heard the phrase, don't fight the tape or don't fight the trend. And it's really treacherous to do that right now. The problem is we're still seeing very, very narrow leadership, almost increasingly narrow leadership. And we've seen a tremendous amount of key divergences since basically this latest leg of the rally in May. And that's one of those things that it doesn't usually end well. But the problem is I can't tell you when it ends. You know, just put it in perspective. For example, you showed Goldman Sachs with the 5,600 price target, which implies 3.1% rise for the end of the year. Well, if I leave my money in a money market fund at 5%, I have basically the same return by the end of the year, call it 2.5%, with no volatility and no risk. So, you know, it's not the most compelling argument right now, except for the fact that these same stocks go up every single day.
And also, I guess you look at the flip side there, given it's driven by just a few of those stocks, the prospect perhaps of a pullback would be even deeper, would it not be?
Exactly. See, it's one of these situations now where there's such a heavy weight, as you just noted, in the S&P 500. So the problem is, I think, you know, a lot of people will think they're buying a very diversified group of assets when they buy an S&P 500, index fund, let's call it, or an ETF like Spiders. The problem is, you know, a third of it is basically mega cap technology. And the problem you have is if those stocks turn south, because everybody's bought them, we just sort of run out of buying interest. Who do you sell them to? And that sell-off becomes very deep, and you get a lot of other equities thrown out with the bathwater as people just try to raise cash or raise funds, because a lot of people are buying these on margin right now. And so this becomes a fairly tricky situation. It's great while it lasts, but I don't want to go overboard pointing out the divergences and the fragility. But one of the things I've been discussing is, if you like these stocks, hold your nose, buy them. But it's also it's almost basically never been cheaper in the last 6 years to buy 5% or 10% out of the money puts on the S&P 500. So maybe that's your way of buying insurance, while if you feel like going all in on these stocks.
Now, Steve, we're also heading towards the end of the quarter. What should we be watching out for there? See, you're pointing to a rebalancing of some of those indices.
Yeah, this is an interesting week here in the U.S. because we have off on Wednesday. It's a relatively new holiday called Juneteenth. I was with some people from the New York Stock Exchange today, and they said, "Oh, we had baseball tickets for clients on Wednesday," and then realized that, no, the clients are working, that we're closed. So everybody's a little caught off guard by this holiday, but it's also happening during triple witching expiration, which brings with it a quarterly rebalance for S&P 500. The key one to watch here is XLK, which is the technology sector spider. There's that technology word again now. And because of the way the index needs to be rebalanced, it's believed that there's billions of dollars worth of Nvidia to buy, which could explain why the stock's been on a constant tear, and Apple to sell a corresponding amount. The interesting thing there is Apple too has been on a tear. So we see how this all works out. So it's become a big week for vacation because you have the holiday in the middle of the week. But we've been on light volume, and so it'll be very interesting to see how this all shakes out, because we don't have a lot of economic numbers as well to really drive the trading. So it's a little bit of Fed speak, a holiday in the middle, and a big rebalancing at the close on Friday.
So, Steve, what are you watching out for, particularly at a macro level at the moment, data-wise, but also given the Fed speak that we've got at the moment as well?
Well, I mean, I think the Fed speak has been rather consistent, right? They're pretty much at this 1 to 2 level. The market's still sort of closer to 2, but I think a lot of the Fed speakers are talking us down to 1. I think, as usual, there's less emphasis paid on what the other Fed members are saying relative to Jerome Powell, although he's scheduled to speak in early July now. There's a date set for him to testify in front of Congress. That's where it gets saucy. But till then, there's not that much to say. I wish I could come up with some sort of calculus, like it takes 7 regional presidents to equal one comment from Jay Powell, but I haven't been able to determine that yet.
Yeah, well, that'd be an interesting way of quantifying it. Now, Steve, we've spoken about this before, those events that occur beyond the US borders, given what we saw in Europe, the political uncertainty there. I know you said before that doesn't really move US markets, does it? But are you expecting any sort of particular effect there?
In theory, it should. I mean, what happened, the pullback on the continent, particularly in France and to some degree in Italy, shocked markets. And what we saw was a very interesting pattern. Or this morning when we woke up and the Nikkei was down almost 2%, is we see the futures sell off a little bit overnight, and then as the U.S. traders wake up and get going, then the market sort of ticks higher, and then once the main session opens, it's off to the races again. I've said it before, and you just alluded to it. U.S. investors are extraordinarily good at ignoring inconvenient events that occur outside our borders. So there's an election in the UK. There's this, potentially very consequential election in France that has the French people all freaked out. But we're not particularly freaked out yet about our own election, which is a toss-up and has its own, particularly huge set of consequences that could come of it. Right now, it's just close your eyes, buy Nvidia, buy Broadcom, buy Apple, and go to sleep.
Sounds pretty simple, doesn't it?
Yeah. if only, but right now it is.
Yes. Steve, when should investors become freaked out about the US election?
Oh, I think investors have to consider it. I mean, it's a complete toss-up, and both candidates have radically different strategies. It's we pretty much know what to expect from President Biden. We should know what to expect from a former president, but he's been all over the map in terms of what he's promised to different people. So it's a huge set of circumstances that we just don't know how to deal with yet. A lot of the big, call them, the billionaire classes has sort of rallied around former President Trump recently because he's promising all kinds of tax breaks. But those would probably come with major tariffs, which would have huge repercussions on the world stage. So it's very much a moving target. And again, I think U.S. investors are figuring we'll deal with it when the time comes. But right now, again, let's just keep buying AI related tech stocks.
As you say, sounds simple. Steve, thanks for joining us from Interactive Brokers.
My pleasure as always. We'll talk again soon, Andrew.
Cheers. All right, let's take a look at the local market. We are expecting a higher open. As you can see there, SPI futures up almost 0.4%. So stay with us. The open is just a couple of minutes away.